Hello and welcome. Have you ever looked at a professional stock report and just wondered, how do they get from all of this data to a simple word like buy or sell? Well, today we're going to peek behind the curtain and decode a real analysis step by step. Yeah, that's the big question, right? And the answer isn't some gut feeling or a hot tip. It's actually a lot more like detective work. So let's play detective today. Follow the clues and see exactly where the evidence leads. So, who's under our microscope today? We've got a comprehensive report on Motilal Oswal Financial Services, a really big player in India's financial scene. We're going to break down how the analysts did their work from A to Z. So, what's the game plan? Simple. We're going to follow the analyst's thought process. We'll see how they connect all the dots, starting really broad with the whole industry and then zooming all the way into that one final call. All right, first things first. You can't analyze a company in a vacuum, right? It's like you've got to understand the ocean before you can understand the fish. So the very first step is to check out the health of the entire industry. Is the tide rising for everyone? And the report paints a pretty rosy picture, honestly. We've got more people getting into finance, incomes are going up, and everything's going digital, which makes investing super easy. This is basically a massive tailwind pushing companies like Motilal Oswal forward. But, it's never that simple, is it? It's not all smooth sailing, and that's what's so interesting here. You've got these huge forces for growth, but on the flip side, you've got some serious headwinds. Think intense competition from all these new fintechs, and of course, the market just being, the market. It can be volatile. Okay, so we've got the lay of the land, we understand the environment, now let's zoom in and put Motilal Oswal itself under the microscope. How is this company actually doing in the middle of all that? Whoa! Okay, the first number that just leaps off the page is this one, a 45.2% jump in net profit, year over year. That is a huge number that definitely makes you sit up and pay attention. But the real question is, what's behind it? And this is the key part. It wasn't just some lucky fluke. That huge profit number is built on something solid. The report shows everything is growing strong, right across the board. Total revenue, the assets they manage, everything's up. It's a sign that the whole business is firing on all cylinders. And a huge reason for that strength? It comes down to diversification. The report really hammers this point home. You've heard the saying, don't put all your eggs in one basket, right? Well, that's exactly what this is. They have 4 different business areas, so if one has a tough quarter, it doesn't bring the whole company down. Now, a good analysis isn't just a puff piece. It has to be critical, and that's what we see here. The report lays out all the strengths, but it also points out the potential problems. And you can see a big one is their dependence on the market. I mean, that's just the reality for pretty much any company in this space. Okay, so we've got all these pieces, right? The industry's doing well, the company financials look strong, but there are some risks. So how on earth do you take all of that and turn it into one single number? Well, analysts have a framework for that. Let's check it out. So this is basically the recipe they use to score the company. And the key thing to notice is that not everything is treated equally. See how financial health and growth prospects get the biggest slice of the pie? They're clearly the most important factors here. And valuation? It's important for sure, but it's not the most important thing in this particular model. And when you look at the actual scores, wow, it really tells a story. The company scores really well on almost everything. Financial health, growth, management, all getting an 8 or higher. But then you get to the bottom, valuation, just a 5.8. That's a massive clue. It's the analyst basically saying, hey, this is a fantastic company, but it ain't cheap. So you do the math, apply all those weights, and you land at a final score of 7.6 out of 10. In the report's language, that's proficient, which means, yeah, this is a really solid business, but you have to keep that valuation score in the back of your mind. All right, we've gone through the industry, the company, the scoring. We've followed all the evidence. Now for the big finale, the moment of truth. What's the final call? Is it a buy, a sell, or a hold? But before they just throw a number out there, analysts usually map out a few different scenarios, kind of like a what-if game. You've got the bear case, the pessimistic view, where they see it at 1,350 rupees. Then there's the super optimistic bull case at 2,400 rupees. And right in the middle, you have the base case, what they think is most likely to happen. And there you have it. The final verdict is a buy. They're setting their target price right at that base case number, $1,850. So even with that lower valuation score, the analyst believes there's enough room for this stock to climb. So what does a buy rating actually mean in practical terms?
Well, at the time the report was written, it meant they saw a potential upside of 12.7%. That's the reward they think you could get for taking on the risk.
But, and this is a huge but, a buy rating is not a crystal ball. It's not a guarantee. Every single investment is a balancing act, and maybe the most important part of any good report is this next part, laying out what could go wrong.
And the report is very clear about the big ones. There's market risk, that's a given. Regulatory risk, you never know when the rules might change. Competition, which we already talked about. And credit risk from their housing finance business. So that's the final piece of the puzzle, really. You have to weigh all these very real risks against that potential 12.7% upside.
So, look, if there's one thing to take away from all this, it's that a professional analysis is never about finding some perfect company that has no problems. It's a methodical process. It's all about balancing the good stuff, the fundamentals, against the bad stuff, the risks, and then looking at the price tag.
Which leaves us with one final thought to chew on. All the numbers in this report point to a buy. But what about the risks you can't put a number on? You know, a massive shift in technology that comes out of nowhere, or a sudden change in how investors feel about the market. Are those the real risks? Just something to think about. Thanks so much for joining me.